What types of alternative assets can I realistically invest through a self-directed IRA, and which ones do investors tend to have the most success with?
Yeah, so in terms of different asset classes, lots of different types of options when it comes to getting into an alternative investment. Now, some of the more common ones that I'll see on a day-to-day basis are going to be those real estate-based investments, those into real estate syndications, real estate funds, or even into real estate property, those spanning across many different asset classes within the real estate world. Also, I'll work with those who are going to be going ahead using these funds to invest into private equity type offerings, as well as those looking to go ahead and invest into venture capital. We'll see investors use these to trade futures, commodity prices as well. We'll see groups even use this as a way to go ahead and loan out funds in the form of a secured or unsecured note. Very, very many types of investments that can be made with that SDIRA.
Yeah, nice. Awesome. And can you walk me through kind of step-by-step that process, setting up and funding self-directed IRAs?
Yeah, so if somebody is interested in going ahead, investing alternatively, getting out of the stock market, off the roller coaster, and more so into a hard asset, the first thing they'd want to go ahead and do is reach out to myself and our team. So whether that's a phone call, jumping on my calendar link, or sending an email, want to make sure we can have that goals-based conversation so that I understand what you're trying to accomplish here with this investment, and to ensure we can get you in the right vehicle to do so. The very first 1A though, Nathan, is going to be to open the account. And after that, we're going to go ahead and fund it, whether it's via a contribution or a transfer or rollover, right? And those will differ depending on what type of account you're looking to go ahead and pull from. After the account's opened, if you're going to be doing an IRA to IRA transfer, trustee to trustee, moving from one IRA to another, we'll go ahead, help you complete what's known as a transfer form. Now, depending on who your custodian is, they may or may not allow for electronic signature, and they may or may not require an account statement as well, in addition to that transfer form. And that's where we will really come in there, help handhold, ensure we have all the information specifically for the custodian you're moving from, so that this can be done in one clean shot. We would then go ahead, send that request to their custodian. We would receive funds via wire, and then we would send a DocuSign of the subscription agreement between the investor, the group. We would countersign and then collect that investor's verbal authorization to go ahead and get them funded.
Gotcha. Sounds relatively simple.
Fairly straightforward, and it makes it so much easier when you have one of my team members in your corner. And that's a stark difference between our institution and any others is we'll be there to help assist, from account opening to funding to getting you placed in your investment.
And then kind of timeline and process beyond that, and what kind of required documentation?
Yeah, would love to get into the more specifics of this. So if we're going to be doing that IRA to IRA transfer, that typical timeline is right around 2 weeks is what we'll see to receive funds from that other custodian. Now, if you're moving funds from outside of an IRA account, let's say you're maybe a past uniformed guard member that has a thrift savings plans, or maybe you come from industry and have a former employer 401k, 403b, 457b, qualified annuity, so many different plans that can get rolled over into this IRA vehicle. If you're going to be moving anything from outside the IRA, it's going to be known as a direct rollover, where your current financial institution, rather than us pulling the funds, will actually cut a check to be sent in the mail to us, to then where we'll hold on to it for 5 business days until that check clears, which is going to add another week to that process. So rather than the 2 weeks with the transfer from the IRA, any rollover from outside accounts is going to take that 3-week mark.
Gotcha. Okay. And what are the most common prohibited transactions or compliance mistakes that investors might make? And how do you help prevent them?
Yeah. The most common one that I'll see is related to prohibited parties. So the IRS comes right out and says, hey, these are the parties you're not allowed to transact with, right? And the first one's going to apply to myself, which could be known as self-dealing. So let's say, using a hypothetical, I own a couple acres of real estate. Let's say I want to sell them to myself, to my IRA, would not be able to do so. I'm going to be prohibited to that IRA. The same would hold true of any of of a spouse that I would have as well. Any direct ancestors, so my parents, grandparents, and then also my descendants, so my kids, their marriages, my son and daughter-in-laws, and their offspring, so my grandkids, great-grandkids, their forth from that lineage, I'm not able to go ahead and transact with. So it's important to understand when you're making these investments out of the IRA account, hey, these are the parties that are immediately off the table. Now, not all family members belong to that list, right? Brothers, sisters, uncles, aunts, cousins, they're fair game. because the IRS doesn't think they're going to do you any favors on any of these investments as opposed to those direct lineages.
Great. Yeah, is there anything else you kind of want to add? Maybe some of the value propositions around this type of work and why it could be a good direction to go?
Yeah, would love to speak to that. So one of the biggest advantages to investing with your retirement funds is that, one, you're not paying capital gains tax once when there is a sale, and two, you're going to be able to go ahead, and if you're investing with a Roth account, you're going to be able to compound your wealth in a tax-free environment, which is very, very powerful. And there's not many accounts that you can go ahead and accomplish that in. So when going ahead and taking a look at this, if you're going to be selecting that Roth account, those post-tax funds, you're not paying capital gains tax on that initial liquidation, that sale. You're also not paying ordinary income taxes when you take that distribution. So an awesome, awesome tool to really go ahead, compound those earnings.
Awesome. Great. Yeah, thank you so much, Paul. I think this has been very informational. And yeah, anything else you want to add?
Yeah, wanted to go ahead, speak to another pitfall that I at times will see clients go ahead and hit, and that applies to when they're going ahead and making these real estate investments personally out of their own accounts, purchasing property, let's say, for instance. Something important I do want to call out, you're not able to personally take advantage of your credit on behalf of your IRA as well. So important to understand when somebody is looking to go ahead and purchase real estate property, let's say a single family home or a duplex, important to get that you cannot personally guarantee a loan on behalf of your IRA. You got to get what's known as a non-recourse loan. So for those who are very real estate minded, when you're going ahead acquiring property via loan through that IRA, you need to get a non-recourse loan. We can't personally guarantee it.